Hey guys, on to the next video. Now welcome to price action from the ground up. So I hope you've enjoyed the videos up to this section and you've learned about risk reward, money management, trade examples, chart setups and so forth. Now this is where it starts to get busy on the actual charts and we dive deeper into the arts of technical analysis and so on. Now price action candlesticks, there are 10 formations in the book. Okay, as you can see here, page 130, Japanese price action candlesticks. Other methods of charting are line tool and the bar chart. We don't really use any of those. The only time we really use the line chart is to maybe modify some of our key levels on the chart. However, in the next section, key level placement, the foundations, I'm going to be going into the monthly, weekly, daily key level placement. I'm going to be giving you all of the levels on my favorite currency pairs as well. And what are key levels, psychological boundaries, and how all of that works. Now, so we have 10 major formations, and all of this is in the book. You're going to have to read through the book a few times, but I'm going to be relating to it now on the actual charts. So what we're looking for is, this is the GBP USD in front of us, and this is the daily time frame. Now, I'm just going to skip over to, let me just load up a GBP USD chart which already has all of the key levels placed on. Give me one moment, please. All right, expand this one. So as you can see here, we have the blank chart. If anybody looks at this blank chart on the daily time frame, it can be very, very confusing as to where to start. If they looked on the weekly time frame, it can be even more confusing. Monthly time frame, it can just get a little bit hectic. Now GBP USD overall, if we just look at this, the entirety of this chart right now, we're actually in multi-year lows. Okay, multi-year lows. So we're currently trading at 1.3139 at the time of me shooting this video. This is a Monday and it's currently 5 p.m. So candlestick formation is important. Now where do we actually start with candlestick formation? We actually start on the monthly time frame. Now in your trading plan, in your journal, I've already mentioned it's great and really, really handy for you to actually have a notepad, okay? Notepad, let's say for instance, I've mentioned that I'm going to be focusing on 5 major currency pairs, maybe 6. However, it depends on what level you are at in your own chart skill and as you are as a trader, you can actually squish that down and maybe just focus on 2 currency pairs. We have to live these pairs out day in, day out. You can't be getting confused with trying to trade 15, 20 currency pairs. We want to keep it short, sweet. So GBP USD overall, each one of these candlesticks, okay, so current month, let me just explain the current month. Now, we're halfway through August right now. As you can see, this was July. All right, so this was July and we're currently in August. As you can see, the candle of July, we opened right at the base of the prior month's candle there. So we have June, close, July. This was the result of Brexit, Britain leaving the EU. However, all of these cycles and all of this market movement is already pre-planned. It's predetermined. This was 2008's crash here, thousands and thousands of pips, and the next 7-year cycle's already started and we've done the same thing. So again, fundamentals, they're using the fundamentals as an excuse to dump the price over here. But anyway, let's get back to the point. So last month's candle, we opened, we must have spiked up. So where we've actually left the top end wick over here, this at one point was in fact a green candlestick. We've come all the way back down and we spiked all the way down here. So you can see to the right of my crosshair, 1.2785 was the official multi-year lows and the lows of last month. But unfortunately, or not unfortunately, but unfortunately for this candlestick, the way it's actually formed is because of it could not sustain its lows. So it's gone from 1.2785 and it's closed around roughly 1.3217. So 1.2785 to 1.3217. So just, let's just say it's 400 pips. So 400 pips here, 400 pips there. So this is the monthly time frame. The next month, the current month is open. We've had a little bit of a breach to the highs again, and that's where we've left the wick at the top, and we've come all the way back down here. Not as low as the prior month, but 1.2866, so around 100 pips off where we went in the month of July. Currently, because this month has not formed yet, this is where we're trading now. Now, we've still got 2 weeks left of the month, and this is important. So if you're going to judge on any time frame, I'm going to show you the lower time frame shortly, but we always must wait until the candle actually closes. So this in the next 2 weeks could close all the way down here and remain a big bearish candle, big red bodied candle, or it could close up here and give us something like this, a nice green candle. So where we've opened here, top left hand corner, if the price is below, the body's going to be red. If the price is higher than that, the body's going to be green. Simple as that. So as we go down time frames, now this is the weekly time frame right here. So as you can see, if I go from monthly, I'm zooming in weekly. Monthly, weekly. There's obviously 4 weekly candles that make up a monthly candle. Now this week here and this prior week, if I go down to the daily time frame, there's obviously 5 days in a week. So today's Monday, so we have Friday, Thursday, Wednesday, Tuesday, Monday. So as you can see from Monday's candle close, we've opened here, closed here. Tuesday, boom, all the way back up. Wednesday, we've had a doji, okay? The doji candle, which is actually this candle here, and all of this is explained in the book. This represents indecision. So we've had a nice bullish candle. It's actually a bullish engulfing candle. Here we've had the doji, so we've tried to breach highs, we've gone down to the lows, hence this wick being left and this wick being left, but it couldn't really sustain highs or lows, so it's indecisive. So quickly, I'm just going to show you how that looks on a smaller time frame, and this is how it looks within this range here. All right, so we have this range. Let me just change the color of this box quickly. This is inside that daily bar. So if I go back to the day, as you can see, I've highlighted the doji there. We zoom into the 4-hour time frame. This is the price action within that. All right, so this is why we kind of want to keep all of our analysis and so on at the higher time frame level, because we can get the most clarity from doing so. Many traders often fail because they're too focused on 30-minute time frames, 15-minute time frames, which isn't a bad thing as long as we take into consideration the overall trend. Companies, corporations, the banks, the central banks are going to be driving a price. It could be over a 6-month period, 12-month period, but they're going to be aiming for a specific price for a specific time. All right, and it will get there. However, before it gets there, we're going to see a lot of choppy price action on the way down. Okay, and as we go lower and lower and lower into our time frames, we can actually see how evident it is of all of these market waves, cycles, and so on. Now, with candlesticks, you guys really need to go in and study all of the different ones. So we've got the doji formations here. Within these doji candlesticks, there's a lot of indecisive price movement, and there's also a lot of accumulation going on. What I mean by accumulation is that, let's say for instance, let's get to a 4-hour time frame. If you look at the 4-hour time frame, you can see, let me just remove the box here. You can see here we have doji. We have the dojis and the spinning tops. So the dojis are more or less the candlesticks, whereas we have a wick on either end. Okay, wick. It doesn't really matter if the close and open. So we open here, we close here. It doesn't really matter if that's off center or more or less near to the highs or near to the lows. It's still representing that the market doesn't actually know its direction yet. It still needs to find its feet. This one is a sell signal, and the opposite to that is a buy signal. With any of the candlesticks we're about to go through, if you're entering solely off a candlestick formation, you want to place your stop 15 to 30 pips on the opposite end. So let's say you went short after seeing this, because what's happened is we opened on a smaller time frame, we've gone up. I can just draw this out on the whiteboard for you. So that doji candlestick there, we just need to more or less break down the psychology of what's going on behind the scenes. All right, so we have the open, we have the close. At one point, let's say this is a daily candlestick. At one point, on a smaller time frame, we've had a few green bars, the price has accelerated. Boom, it's hit a level across here, whichever level it may be. Boom, and then we've come all the way back down. So where I've drawn the green candles, the red candles, let's just call these candles for now. This is a smaller time frame, so this may be like the 30-minute or 15-minute, but overall on the daily time frame, it's actually looking like a doji. Okay, this doji here. So what this tells me is that, okay, prices run up, something around here, whether it be a key level or not, has rejected the price. The price cannot go any higher. than this level, whichever it may be. And then if we've closed like that on a 4-hour or a weekly or a monthly, any time frame, but what I'm trying to get across here is that monthly, weekly, and a daily are going to hold the most relevance and the most significance. So if you're seeing this on a monthly time frame, a closed candle at the end of the month, and we're doing our analysis at the start of a new month, we see this candlestick and say, okay, cool, there is a potential that we are going to now see further downside for the rest of the month. It could pull back first of all, but we can collect this data, knowing what these candlesticks mean, to get an overall insight into which direction the market is going to flow. And all of the candles are the same, to be honest, in terms of how we use them. There's examples throughout the book. All right, so the spinning top here as well is in fact the same as the doji. So over here we have a spinning top there, this green one, and the only differences between the spinning top and a doji is that the spinning top may have a slightly thicker body. Okay, spinning top here, indecisive. Doji, doji, doji. Spinning top, doji, doji, doji. So the market here is resting. This could be throughout the night, maybe in the Asian session when the market's quiet, especially for like the GBP USD, Euro USD, and also let's say USD CAD. All right, the ones that are maybe more active in that session, maybe the yen pairs and maybe the Aussie pairs. So the market is consolidating, waiting for maybe the London session to open and so forth. This is just a brief example that I'm giving here off the top of my head, and then the market actually makes its move. So over here I can see where we've come into this area of consolidation. We have spinning top, that's that body there. If the lower wick was slightly longer, because we kind of need the wicks on either end to be more or less the same length, give or take a few pips. Nothing is ever 100% in the market. History will repeat itself, but we need to be a little bit more dynamic in the way we actually view these candles. So here we've gone sideways, one broke out into a new structure. Now GBP USD is looking as if it could potentially make new highs. So what I actually see here, just briefly, we have this base where we've found support, then it's made a new higher high. It's pulled back a little bit, and here is a new higher low, higher high. This area is a new higher low, and the new higher high is a potential. I'm going to go through all of the higher high stuff in the next video, so don't worry about that. Then we get the hanging man formation, which is quite rare. I wouldn't spend too much time on this, but here I have done the examples as to how to trade it. And to be honest, guys, wait for the hanging man for me. Well, wait until I actually find one on the charts. Let's say on one of the weekly breakdowns, I can go through it full, give full attention and focus to that. We get the hammer, and we also get the shooting star. So shooting star and hammer, that's a little shooting star there at resistance. Again, the weekly and the dailies are going to hold the most significance. Not in terms of, okay, let's always trade on a weekly and a daily. No, we don't want to execute on the monthly or the weekly. Daily we can execute from, whether it be some candlestick formation or any other strategy that we're about to go through. However, what I'm trying to express here is that the weekly time frame is great because the week has ended. It's a new week. Let's always go back to the prior week's candlestick on whatever currency pair we're looking at to see can we find any of these formations. So let's say we found a shooting star at resistance on GBP USD or Euro for the week ahead. We're going to be looking at, if I just pull up the Euro for a moment, let me just find a shooting star. Okay, so there's one over here. We've got that shooting star there, and this is a daily time frame. If I just go to a weekly, I know there's many of these on the weekly time frame. Okay, so there's one here on the weekly time frame. Now that area on the Euro USD, you'll have all of these levels set up shortly. 1.15. Okay, so around there, 1.1450. This level is a key level of resistance in which Euro has failed to breach. Okay, for nearly 2 years now. It's looking as if it could potentially get there soon. All right, and I'm looking at this now on this fresh, clean chart, looking as if this could potentially be a Fibonacci. A, B, C, D up here. Euro USD could break out soon. We'll get to that later on. So what we have is we have a key level, which is our barrier, and we have our shooting star. It's not just a shooting star we're looking at this kind of overall bias with. It's all of the candlesticks in the book, and it's one of those ones where you have to go through the charts with the key levels drawn on, and you take your time to go in and label this. So you can get the bubble tool, or you can get the the text tool and you can write next to it. Obviously in the real time. So imagine if we didn't see any of this price action here and that week had just closed. You can go in there and say, you know what, weekly resistance 1.1450. Now what I'm going to expect is a potential down move after that. And you can do the before shot, take a screenshot of it, and then you can do the after shot. As you can see here, we did decline a little bit. So that's the weekly. You can write that down on a notepad. Then you can go down to the daily time frame and see how the daily's looking. And as you can see here, this is the daily where it spikes all the way up. And the daily, we had a daily shooting star close 2 days before the end of that actual week. So you can look at this, you can say, okay, cool. One point we had a huge green candle and we've closed all the way back down here. That tells me the market's tried to run up. Something's around here said, no, 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 come back down. And then it's rejected this zone. And it's closed even lower than where it opened. So this tells us there's actual momentum and liquidity in here. Now, with that being said, this because it's a daily, we wouldn't enter off the weekly because our stop would have to be too big. The daily here, we could enter short here, and our stop loss would simply go 15 to 30 pips above here. So let's say 1.1616, let's say 1.1636. Put it down a little bit as a rough example. So our entry would be here, short, sell, stop up there, give it a little bit of breathing room. Targets, that's going to come down to our key level placement, which isn't, which we haven't got on this actual chart. And you know, we could say, okay, we got some support here or support here. We could maybe wait until the Euro USD falls to this point, and then we can weigh up the risk reward, which I went over in the last section. So candlesticks and key levels work hand in hand. Now, GBP USD, as you can see over here, I've got some monthly support. I'm not sure why, but my highlighted zone keeps coming off. And if all of this is looking foreign right now, it'll all become clear after you've watched the next section. You may have to just come back to this one as well. So GBP USD, we came near to support. So we're using these barriers of support and resistance in conjunction with all of our candlestick formations and so on. So the key levels are our foundations, and then we're using the candlesticks to assist us with the overall direction. So GBP USD right now, I can see structure over here showing me lower high, another lower high structure here, another lower high here from the prior. Okay, it's lower than the prior high, and here could potentially be a new lower high. So GBP USD is either going to break above that and breach it, and maybe come and test our weekly resistance over here, 1.3250, or it's going to reject the zone and maybe make new lows. Who knows? We'll see. Staying away from GBP USD at the moment because it's a little bit erratic overall. So guys, you're going to have to just go through the book, go through the different candlesticks. I'm going to be referring back to them on all of the examples going forward. But all of the information is here, okay? And I'm going to try my best to explain all of the examples going forward as to how I would use all of these. So there's 10 here. If you can just maybe focus on 8. All right, if you do the 8 candlestick formations, and as I say, when you do spot them on the charts, do like the before shot, the after shot to see how they played out. Nothing is 100%. What we're doing is we're spotting reversals and reading momentum overall. So for instance, here we have this huge bullish engulfing formation. So this bullish candle has completely taken out the body of the prior candle. So here we're slowing down in momentum, then boom, the markets woke up again. Here, boom, we got the bearish engulfing. We've got bearish engulfing again, and that's also a shooting start there. All right, so I'm not going to spend too much time going through each candle. It's quite straightforward. And you also have nice clean charts now as well. So there's no real excuse as to why you shouldn't be spotting these out. I'm going to try and give you the best help I can going forward. So price action from the ground up, you need to start to study your key levels alongside your candlesticks. All your key levels by the end of this course are going to be plotted on very, very neatly. Okay, I'm going to show you step by step how all of this works. So get to grips with your candlesticks. All of the trade setups I've done at the end of this section as well, I'm always pointing out the different candlestick formations. And we can enter directly off the candlesticks. One last thing I would like to point out, any time frame below a daily time frame, we have a timer. So this is the 4-hour time frame. Now, there's 37 minutes, 7 seconds left for this bar here. This is a 4-hour bar. This is the last 4-hour bar. This is the 4-hour bar prior to that. So each candle here, each bar, okay, this is what the bars look like as well, by the way, guys. You can change over. candlesticks are better visually because it actually plots the body on there, and all of the candlesticks I work with, the patterns are there too. You can't really use them with bars, but in 36 minutes this bar closes. So when we are waiting for a certain candlestick to form, whichever time frame we are on, and remember the daily candlestick closes at 10 p.m. each night, weekly candlestick closes at 10 p.m. on a Friday. Okay, these are very, very important, so we don't have to wait here and sit here all day and wait for, okay, is it time to enter it? You can see there's 36 minutes left on this bar. You can come back in 30 minutes to see how it's played out, if it is a potential setup or potential reversal. So it makes it very, very handy for us as well, especially if you have other work commitments, family commitments, or general, our busy lifestyles and schedules these days. We don't have to sit here staring at the charts. So take that into consideration. But all of these are in here. We don't have to deviate from any of these. I'm going to be using all of these as a baseline and foundation for potential reversals, breakouts, alongside my key level foundations, and all of the other strategies that we're yet to go through. So I hope you enjoyed this video. I'll backtrack on some concepts further into this section and throughout the next sections as well. So candlesticks, key levels, start studying, guys, start studying. If it makes it easy for you as well, you can actually remove the moving averages while you go through the charts and label them. All right, so I hope that helps, and let's get on to the next section.